Hello everybody, I'm John. This is JP Strategic Investments, and today we're going to talk about CrowdStrike's earnings report. And CrowdStrike absolutely crushed their earnings, but the stock is only up about 4%. So what exactly is going on here? So we got to take a look at what analysts are expecting, why the stock is only up about 4%, and how they did in their earnings report. So let's jump right into it. First of all, how they actually did. Well, these are the main numbers here. Revenue, total revenue, which is right up here, came in at about $380 million. We also had ARR increase to about $1.51 billion. And net income, or EPS, this is non-GAAP EPS, was 17 cents per share. So let's take a look at exactly how that compares to what analysts were expecting. So if we go to what analysts were expecting here, go to the revenue. Analysts were expecting about $363 million on revenue. CrowdStrike did 380, okay? So not a huge beat there, but a pretty decent beat. But this is where it gets crazy. Analysts were expecting on EPS 10 cents per share. CrowdStrike did 17 cents per share. That's a 70% beat on the earnings there. Now, normally this would cause a stock to go crazy, but with this one in particular, with CrowdStrike, a lot of what analysts have been saying recently, CrowdStrike has actually got several different analyst downgrades recently. One big one from Morgan Stanley that caused the stock to drop over 10% in one day. And what analysts are saying is that they expect CrowdStrike's growth to slow pretty significantly as a result of increased competition and the fact that that competition is priced much lower than CrowdStrike. So let's take a look at that. And the first thing we want to take a look at there is their guidance, right? Because if the analysts don't care much about what they did this quarter, well, they probably care, okay, what are they going to do in the next quarter? So if we scroll down here, take a look at their guidance. Their guidance for the next quarter for total revenue is $406 to $412 million. All right, well, what were analysts expecting? If we look at revenue, analysts were expecting $399 million. Still pretty decently higher than what analysts were expecting or are expecting for the next quarter. And actually, if we look at their guidance from the last year, it's pretty significantly higher as well. Again, this is Q3, but if we look at their full year guidance for revenue, about $1.4 billion to $1.49 billion. CrowdStrike is now guiding $1.427 billion to $1.43 billion roughly, okay? So pretty significantly higher there, guiding much higher for the fourth quarter of this year, this fiscal year, right? Same thing on the EPS. Analysts were expecting or are expecting for the next quarter 16 cents per share right here. Average estimate for EPS for the quarter ending in January. Well, CrowdStrike is guiding 19 to 21 cents, okay? That puts the midpoint of this guidance about 25% higher than what analysts are expecting. That's pretty significant. So not only did they crush this year's earnings, they significantly raised their guidance for the next quarter, which says to me growth really isn't slowing. And if we listen to some of the things on the earnings call, which I'll play a clip in a second, it seems that growth is actually accelerating. So what is it that analysts are really looking at? Well, they might be looking even further in the future. So if we look at the current year, that's this year, there's only one quarter. If we look at the next year, okay, so what would be their fiscal 2023, because the next quarter is their fourth quarter of 2022 technically. So next year, right, the analysts are expecting, if we go to revenue, that revenue significantly decelerates, okay? If we look at their last year-over-year growth from 2021 to their fiscal 2021 to fiscal 2022, so this year in total compared to last year, they had 63% growth. And the year before that, it was something somewhere towards 80% growth. Analysts are now expecting, based on this 1.95 billion number, that the growth significantly drops to roughly 35-36% growth. that would be a huge slowdown from what we're seeing. And CrowdStrike is only showing now that their growth is actually accelerating. And if we look at their earnings, it's roughly the same thing. Remember, they're expecting average estimate for this year is 0.47 or 47 cents per share, which actually, again, because the analysts are low on this, CrowdStrike is actually guiding for 57 to 59 cents per share. So if they reach that, about 58 cents per share for EPS for this fiscal year, if we look at the next fiscal year, 78 cents right there, that's also only about 35 or 36% growth. So this is where it really seems that analysts are kind of digging in, is that, okay, they're accelerating now or they're growing now, maybe they're going to grow in the next quarter, but over the next year, we really expect that growth to decelerate. And the main reasons that they're giving for expecting this growth to slow down dramatically are, one, competition is increasing in the quality of the service that they offer, the quality of their cybersecurity, and two, that their competition is priced pretty significantly. They're saying about 15 to 20% lower than what CrowdStrike offers. So there's a couple things with that I want to show you guys on the earnings call that kind of contradict what analysts are saying.
This quarter, our win rates increased across the board, and we saw a record number of wins against both legacy and next-gen vendors with SMB, mid-market, and large enterprise customers. We also landed a record number of wins and displacements over a recently public next-gen vendor, SentinelOne. To be clear, we define a displacement as removing an incumbent's product and replacing it with Falcon. Let me share a recent example with one of the largest nonprofit hospital systems in the U.S., which had initially chosen the recently public next-gen vendor based on price and promised features that were never delivered. Just a few months into their multi-year contract with the other vendor, this organization realized the product failed to scale, caused major performance issues, prohibited critical processes from functioning properly, and drove significant friction within the organization and its subsidiaries. That is when they turned to CrowdStrike, purchased multiple modules in a multi-million-dollar ARR deal, and realized immediate improvement, gaining up to 30% performance increase on their servers alone and greater efficacy without intrusive false positives.
So analysts think the competition is increasing in quality and that their prices are lower, and that's going to slow down CrowdStrike's growth. But CrowdStrike just reported a record number of displacements, meaning they're coming in and replacing another cybersecurity provider that the customer was previously going with as a result of mainly the quality, right? And on top of that, they mentioned that large healthcare, that large hospital provider in the US that decided to go with CrowdStrike after going with one of these other customers based on price. And on top of that, they were in a multi-year contract, and they got out of that contract within the first few months. They decided to switch and go to CrowdStrike. If you try to exit a multi-year contract in the first few months, you're very likely paying big penalties to exit that contract because you agreed to that contract. So that company, that medical provider, whoever that big customer is, not only decided to switch from another customer, another security provider, to CrowdStrike because the quality was just so much of a difference. On top of that, they didn't care about CrowdStrike's extra price, and they were even willing to pay a penalty on the contract to get out of it in order to go with CrowdStrike. So to me, that speaks volumes about CrowdStrike's quality in not only their security, but also just how they're able to meet the needs of those customers so much better than a lot of these other security providers. So for me, this makes it very hard to believe what these analysts are saying about CrowdStrike's competition, because it seems that exactly the opposite is happening from what we're seeing in this earnings report. And one last thing that I do want to mention here, some of you guys may not know, but CrowdStrike has a variety of different modules that they offer to customers. One of the things that makes them so great is they're very customizable. Somebody who just has a laptop, all they want to do is get some good protection for the laptop against malware, antivirus, ransomware, things like that. they may only need a couple things to protect their laptop, but then CrowdStrike also has a variety of other things that they can offer companies that are much larger that need to track things and protect things across entire networks. That customizability comes through all these different modules that they offer. Well, CrowdStrike tracks the number of customers who go with 4 or more modules, 5 or more modules, and 6 or more modules. And those modules have been growing quarter over quarter. Literally every quarter shows growth in the adoption of those models. And so just one thing I want to show you guys here is the customers that just 1 year ago were going with 4 or more modules, 5 or more modules, or 6 or more modules. In the third quarter of last year, that was 61% with 4 or more, 44% with 5 or more, and 22% with 6 or more. Well, in this quarter, just 1 year later, CrowdStrike is able to increase that to 68% of their customers using 4 or more modules, 55% using 5 or more, and 32% using 6 or more. So just that right there shows that not only are they able to gain a ton of new customers every quarter, increase that ARR, but also on top of that, the existing customers that they have, they're upselling them progressively, and that shows two things. One, it shows that the customers that CrowdStrike currently has like CrowdStrike's service enough to purchase even more modules. And two, it shows that CrowdStrike is able to increase the revenue that they're making just from the current customers that they have, right? They not only can increase revenue by bringing more customers on, but they're able to increase revenue, increase that ARR, just by upselling the customers that they currently have, which, by the way, is probably much more cost effective for them than bringing on entire new customers, especially if they're larger customers. So anyway, that overall is my take on CrowdStrike's earnings and how they did. I personally think they did really well, phenomenal earnings, and I definitely don't think the stock should still be at the levels that it's at. I went ahead and bought some more CrowdStrike stock today. But let me know what you thought of these earnings if you're a CrowdStrike investor. If you have any questions, leave those in the comments below. And other than that, I will see you guys next time and have a great day.